Hello, everyone. This is Stephen Richardson. Today, we're going to be talking about a federal taxation question about income and exclusions of income. Um, you can find the the outline the checklist that I'm using from lawschool-essentials.com, and we'll look at the outline, get ready to answer this question, and some basic answers. So let's dive in. Again, this is not not be construed as legal advice. This is educational purpose only to help students in their federal taxation exams or bar exam. Okay, first thing you do is read the call of the question. What is Tripp's income he must report on his 1040 tax return? Discuss. Can Tripp recently deduct the maintenance payment to Madeline? Discuss. So let's read this. Eddie Tripp Panizzi III is a recent graduate of Grover Cleveland School of Law. Prior to taking the bar exam, he interviewed with Dewey, Cheatham, and Howe, a professional corporation, the firm, and accepted an associate attorney position with the firm. His starting salary is $60,000. His direct supervisor, Mr. Howe, informed him he had unlimited use of the coffee machine and snacks in the break room because of the long working hours. He was also advised that if he passed the bar exam on the first try, he would earn a $15,000 bonus. He was also provided a 2023 Maserati Sport Edition from the firm. Title was not transferred from the firm to Tripp. The car's fair market value is $93,000. That car normally rents for $666.67 per day, not including insurance. Because Eddie received a company car, he sold his Winnebago that he had used through his college and law school years for $5,000. His cost basis was $5,000. Tripp was able to negotiate with Mr. Howe to pay for the firm to pay the remaining amount of the loan he had on the Winnebago, which was $1,000. The firm paid off the remaining balance of the loan. Just before passing the bar exam on his first try, the stress from studying and work led to the separation of Tripp and his wife. They therefore decided to sell their home, which they purchased and lived in for 7 years together for a net profit of $30,000. The separation agreement from the court indicated that Tripp would provide his wife, Madeline, $666.67 per month in maintenance payments. Prior to the court order, he voluntarily paid Madeline $2,000 in support payments. Tripp won the Greater Sacramento Area Science Club's Scientist of the Year. His undergraduate degree was in physics. His research directly led to the buckyball theory. On July 6, 2023, Tripp was given a new watch by the Science Club valued at $4,500 and a 14-karat gold coin commemorating the achievement valued at $500. Tripp started working for the firm on January 1st, 2023. Wow, seems like a racehorse here. So first thing that comes to your mind, income sources. Income derived from whatever means. So a salary, of course, bonus, of course, the award of the watch and the gold. Well, I'm going to have to see. The loan repayment, definitely. Are the perks the de minimis perks? I don't think they are. The company car, we're going to have to see on that. And profit from the sale of the house, I don't think so. Um, Deduct the spousal support. On 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 first blush, it looks like yes, because alimony is deductible, but there's some exceptions, and we'll get into that shortly. Okay, so here's the checklist that I snipped and pasted directly from the checklist at lawschool-essentials.com. Run, don't walk over there to look at these products. So first thing is gross income, how it's defined. And then you've got gross income is income from whatever source um, derived. So it's pretty much no brainer on the income and the bonus. So now I have to look at the prizes and awards. So that's in IRC 71. The gross income definition is IRC 61. And then gifts, we're going to have to look at IRC 102. Does not include value of gift, bequest, or device, the basis. The transferee takes a gift with the transfer exceptions, and then their employee gifts unless achievement award. And then alimony. There's a question on the alimony. Is that deductible? That was the second question. And then exclusions, discharge of indebtedness, IRC 108. And I don't think fact pattern did not state any of these limited qualifications, so exceptions. So that's not going to count. So it's probably going to be valid. Gain from the sale of principal residence is excluded in IRC 121, and we'll take a look at that if he meets these the criteria for that. And then the de minimis, the fringe benefits de minimis, and transportation fringe. So is that car? Is the whole car or just like a monthly amount of the car, the rental of the car, uh, excluded? So or included? Let's go ahead and take a look. So what must TRIP include as income? So first rule, except as otherwise provided in the subtitle, gross income means all income from whatever source derived, including but not limited to the following items: compensation for services, including fees, commissions, fringe benefits, and similar items. So that's 60,000 and 15,000, right? Gross income does not include amounts received at prizes and awards made primarily in recognition of scientific achievement, but only if the prize or award is transferred by the payor to a governmental unit or organization described in one or two of the section um, of Section 170C pursuant to a designation made by the recipient. So that in that's IRC 74B3. So Section 170, this doesn't apply because you would have to transfer the value, the goods or the value of the goods to a charitable institution. So he's on the hook for the value of the watch and the gold coin, which is together $5,000. So gross income does not include any amount which, but for the subsection, would be includable in gross income by reason of the discharge in whole and part of indebtedness of the taxpayer, except for some limited items, and that's from IRC 102A1, and the exceptions are big A through big E of A1. So here, the cost basis of the Winnebago is the same as the sale price. So this is net gain of zero. So nothing taxable there. However, the firm paid off the $1,000 loan, and this must be counted as income for a trip because none of the special applications paragraphs A through E are applicable. Okay, next one. Subsection A shall not include from gross income any amount transferable by or for an employer to or from the benefit of an employee. So that's IRC 102C1. Here, title to the Maserati was not transferred to TRIP, so this is not a gift. TRIP is therefore responsible for the market value of the rental for the year. We started on January 1st. So that's $667.67 times 12, $18,000. So your conclusion should be TRIP's income appears to be 89,000, which is 60 plus 15 plus 5 plus 1 plus 8. So that's what should be included in the income. Now we look at exclusions from the income. So gross income should not include any fringe benefit which qualifies as a de minimis, right? So here, although not indicated, coffee and snacks provided to TRIP would presumably be provided to similar employees, and it's hard to account for that by each employee, so it's excluded. Gross income shall not include gain from the sale or exchange of property if during the 5-year period ending on the date of the sale or exchange, such property has been owned and used by the taxpayer as the taxpayer's principal residence for periods aggregating 2 years or more. So they had it for 7 years. So the $30,000 would not be income because it falls within the 250,000 filing single or 50,000 filing jointly. Okay, can TRIP deduct the maintenance payment to Madeline? This is a little bit tricky. Alimony or separate maintenance payments received from the husband made via decree of divorce must be made in discharge of legal obligation. Okay. But this was not. This was before the legal obligation. He made it before, so he's not on the hook for that $2,000. I think it was. That's IRC 71B1. So, but the facts didn't state how long, so we're going to have to assume that this I would assume that this happened at the end of the year, so that because we weren't given any timeline to multiply the monthly maintenance times how many months. So that would be your conclusion. So you've had 8 minutes. Let's see, 8 minutes plus 10 minutes plus 15 plus 15. That is 58 minutes. So you're right on. This concludes this federal taxation question. Again, this is not legal advice, and I'll see you on the next one.